You worked at two top high-frequency trading firms. What's it like being inside one of these shops?
You're surrounded by some of the smartest people in the world, including like international mass Olympiad medal winners, professional poker players, and you're in a cutthroat business, right? It's not like B2B SaaS here. You're not like trying to create value, increase the size of the pie, right? It's like whatever money you make, somebody else is going to have to lose, and they're just as motivated as you.
Annanay Kapila kicked his career off as a quant crypto trader at Flow Traders in 2020, just before 2022's crypto winter. Then he jumped into high-frequency trading at Tower Research.
If you do a good job in this industry, 5, 6, 7 years in, you could have made enough money to like not really have to work again. So they don't have to work anymore. No one retires early. Why do they keep going? It's because everyone who gets selected has that desire to win, and it like transcends money, even rationality at some point.
Backed by Y Combinator, he's now building FTX, but without the fraud.
So we're building QFEX. We are aiming to provide that 24/7, no broker, completely seamless trading experience. Our average team age is probably like 24, 25. In fintech, that's still really, really young. We all worked at the top trading firms. We didn't grow up with those preconceived notions that this is just how the world is, this is how financial markets work.
As a young person today, what advice would you give?
Don't subscribe to the doomerism. I think now is the best time to be optimistic about the future. My life would have been significantly worse if I was just born 10 years ago. I dread to think how much better my life would be if I was born 10 years from now.
Annanay, thank you so much for doing this, man.
Sounds good. Yeah, thanks for having me.
You worked at two top high-frequency trading firms. What's it like being inside one of these shops?
I had to put one word to it, probably intense. You're surrounded by some of the smartest people in the world, right? We're talking like international mass Olympiad medal winners, professional poker players, whatever the archetype is of the firm that you're working at. And you're in a cutthroat business, right? It's not like B2B SaaS here. You're not like trying to create value, increase the size of the pie, right? It's like whatever money you make, somebody else is going to have to lose, and they're just as motivated as you. So that's kind of the feeling going in. And a lot of these guys, a lot of these people, when they interview, they try and make out like they're all very friendly and all this stuff. But the guys who really succeed and what they're looking for definitely have an edge about them. They definitely like want to win. Doesn't have to be the archetypal, Chicago pit trader or like professional poker player type, even though there are plenty of those. It can be like MIT math nerd or, Cambridge math nerd, like I am, I guess. But everyone's like very motivated, and it's like a very intense and driven environment, right? Like it's very results driven. And there's not much room for error, I would say. And it depends on like what kind of strategies the firm is running. Sometimes they're kind of more research driven. You don't have to like make fast decisions on the fly. Sometimes you do. But either way, there's no room for mistakes really, because mistakes can be really expensive, and you can see how expensive they are very quickly. At a lot of other industries where it's harder to measure.
So you mentioned there, the top people at these firms have an edge to them. There's something about them. If you could boil down what that edge might be, what is it?
Yeah, I think it's more than just like a desire to make a lot of money. That's what people see on the outside, right? Like the salaries are really high, especially for new graduates. They start out like ridiculously high, right? Like maybe a few years in, if you're kind of middling performance, you can kind of see, especially with like AI coming out, you can kind of see there's like a small comparison being made there. But at the beginning, they're like top class, right? I think what really differentiates the people who just want to make a lot of money and people who like make it in the industry is like they have a desire to win against other people who are also really smart, and that overrides a desire to win. If you look at people like Alex Gurko, Ken Griffin, these guys have made like billions of dollars, right? So they're chilling, and they could call it quits any day, but they constantly rage about market structure. They constantly rage against other people who they consider to be their equals because they can't stop without feeling like they've won against them or they've beaten them at something. So I'd say it's that like very sharp competitive edge, and it like transcends money, even rationality at some point, right? Like if you do a good job in this industry, 5, 6, 7 years in, you could have made enough money to like not really have to work again, right? Like if you do a really good job. I have friends from my class at Cambridge who've been making like over 5 million a year for the last few years, right? So they don't have to work anymore. So why do they keep going? And like everyone does keep going. No one retires early. Why do they keep going? It's because everyone who gets selected has that desire to win. And that's what like transcends the logical aspects of it. Like I want to make a lot of money, I want to have a good lifestyle. Yeah.
I fully agree. And I think what you've said there about a guy like Ken Griffin or Steve Cohen or these top, let's call it, owners of trading firms or pod shops, multi-managers, at some level, it is ego. Because as you've said, man, dude's worth 20, 30, in Ken's case, 50, or Jeff Yass, like 60, right? I mean, that is not just enough money for you to live comfortably. It's enough for probably 4 generations, and each generation having plenty of kids to live extremely, extremely lavishly. And so, when you're at these firms, you talked a little bit about some of your friends from Cambridge, who have been bringing in 5 million US for the past couple of years. I guess I want to hear about the nature of the work that you do, because I think, trading is a very broad subject. There's market making. There's also speculating on the actual delta. There's also trading volatility. So I'd love to hear it. What split would you say that, what does that look like? What does the actual split look like at a top trading firm like Gower?
Yeah, really, really, really good question. I think when I went into the industry, nobody would ask those kind of questions because the industry was too secretive and too shrouded. And no one really knew. Everyone thought like Jane Street is probably doing the same thing as Tower, is probably doing the same thing as Citadel. And they're actually very different firms. So there's like 2 axes that you can kind of put. So there's 2 axes, and then you can kind of put quadrants in each one. You can kind of put firms in each quadrant. So one axis is like how long-term the strategies are. So when you think of prop trading, people typically think of high-frequency trading. High-frequency means very, very short-term time signals, not trying to predict markets at all that much. Typically, if you want to model the markets at a very short time scale, use very microstructure-driven features. So you just need to look at the order book, and you pretty much have an idea where the stock's going to be in like the next second, let's say, or the future, and not connected to the fundamentals at all. And these strategies typically have a very low capacity of like the amount of money you can put on them, right? So that's why typically prop firms that don't take outside capital, they're not hedge funds, they just kind of trade with the partner's money. They tend to be high frequency because typical high frequency strat, you might only be able to put a few $1 million on it, but you can make like 50-100% return on capital year on year. The other side, so kind of, most quant firms historically have been more on the high frequency side because it's easier just to mathematically model the next second, next 5 seconds, next 30 seconds of price movement than it is to model where the stock's going to be in a year, because that's more kind of fundamental and discretionary driven. But quant firms have moved into those longer term time signals. The other way I would split them is basically there's like 2 schools of quant trading, right? There's the Chicago school, right? And then there's like the MIT math school, right? So Chicago school is all like ex-pit traders, and these guys were just market makers originally, right? So what they were trying to do is buy low and sell high in the pits. And the smart ones ultimately made a firm to do this using computers once the exchanges released APIs. So CME released GlobeX in the early 2000s. The futures exchange in the UK actually called Life, which is no longer active, released the first API in 1998 for electronic futures trading. So they're basically pit firms that develop, and they maintain that kind of spirit, right? So the people they hire, we're talking like Optiva, Jane Street, these kinds of places, Susquehanna. The kind of people they hire tend to be very good at thinking on their feet, very quick, very sharp, very good at game theory. And that style of trading works well in instruments that are not necessarily very liquid, or they have a lot of information content off the order book. So options, volatility, those are very hard to kind of do completely mathematically. In liquid assets, that's kind of bread and butter for these Chicago style firms. So, not IMC anymore, even though IMC is a Chicago firm, but more like Optiva, Jane Street, Susquehanna. And then on the other side, you have firms like Tower, Jump, Citadel Securities. These are firms basically started by mathematicians, right? Started by people who always approach the markets like a scientific problem. And they are trying to basically create fully automated, fully systematic trading strategies that generally work well when there's a lot of data, and it's very hard to have edge as a human. Okay, so we're talking like S&P, E-mini futures, SPY, QQQ, these like big name, very liquid products that trade billions of dollars every day. In that case of S&P mini futures, like $500 billion a day. That's roughly how much ES trades, right? So what you end up doing at either of these firms really depends. What you end up doing depends on which of these firms you end up at, right? So if you're at like more of an Optiva or a Jane Street, you probably don't do a lot of advanced maths every day. You probably spend a lot of time just figuring out very unique, idiosyncratic puzzles related to the markets that you're in. And if you're at like an HRT or a Tower or a Jump, you probably spend most of your time doing kind of advanced machine learning models and just try to improve them step by step. And you don't really watch the market or care about the market. You could go to HRT and ask people where S&P 500 is at, and like half the quants wouldn't even know, right? I think. Whereas like if you're into J Street, like every single person would know, like down to the cleaners, all the way up to like to the senior management. So that's kind of the difference. What was the original question, Ashley?
It was, what does the split look like between focus on, say, market making? So, okay, given a prop firm, what does a split look like between focus on market making strategies versus, I don't know, speculation, and obviously systematic, but speculation on, let's say, the price of an asset or volatility or, something else?
Yeah, again, really depends on the market. Depends what the opportunity is. If you have, market making and kind of taking position is not really that different. There's like a spectrum of trading strategies, right? Like you have a market making strategy that just tries to stay flat. So if I am bidding for like one share of Tesla, then as soon as I get filled, I can only offer, right? That's like a very, very low risk strategy. If you have more of a predictive signal, more of an alpha, you might think, hey, I'm willing to buy and sell Tesla, but I'm willing to take a position of +10 because I think the price is going to go up. But I don't have enough of a signal to cross the market. I'm only going to get into the position by buying. So then you are trading passive. You're placing passive orders, and you are adding liquidity to the market ultimately. But you're also kind of trading a signal and like a view on where the market is, whether that's discretionary or systematic. I think very, very few firms do pure market making now, where they don't have an opinion of where the market's going to go, and they just try and buy and sell at very close periods in time. They've largely been overtaken by people who have some kind of predictive edge, and they're trying to like get into those positions with like a long-term trade, basically. So that's where the bulk of market making occurs from.
One of the things that just popped in my mind right now is you have a firm, let's say a top trading firm, prop shop, manages the money of its partners. And I mean, their pedigree is extremely strong. Obviously, they know what they're doing, but the brand behind these firms is extremely strong. Now, one of the things that I am curious about, just now is if you have such a strong brand and you have a proprietary trading business with very high Sharpe that makes money, call it basically every year, why not build a fee-based business on the side, raise your 50, 40, $60 billion, charge the fees that the multi-managers do, and run a fee business on the side? It feels to me like free revenue, if that makes sense.
Yeah, absolutely. So you're absolutely right, and this is why a lot of the prop trading firms are trying to do this. So Tower, this is public information. It was in the FT, are raising a fund basically to do exactly this kind of thing. And if you look at not a lot, but there are a few firms who do both very well. Like Citadel have their kind of fee generating arm, the hedge fund arm, and Citadel Securities, which doesn't take outside capital, is like a pure. I mean, they took a little bit, Sequoia backed them and stuff, but it's mostly the internal capital, and it's more of a systematic market making business, right? Same with Two Sigma. They have Two Sigma Securities. They have Two Sigma, the hedge fund, obviously, which does really well. It's an absolutely logical thing to do. I think it kind of goes back to something I said at the beginning, which is that the high frequency trading firms have traditionally focused on very microstructure driven trades. And for that, they built all of their modeling pipeline and data infrastructure around these like very, very, very high Sharpe, low latency sensitive trades, which have the infrastructure to execute. Now, the issue with that is, like I said before, you can't put a lot of money behind them. The reasons why are a little bit technical, but it's basically due to the fact that if you want to think in a very simplistic way, If you have a market making strategy, it's high sharp, by definition, it doesn't take that much risk. So if I have a strategy and, it's market making and it's getting two-way flow, the maximum position it might take in a day, if it's trading like futures worth $100K each, is like maybe $1 million, right? Like it gets long 10 futures and it sells 10 futures. So $1 million, you get leverage on futures. You might only have to deposit like $100,000 per exchange to have $1 million position. So you actually can't take that much capital and put it into these strategies. And in order to basically make it worthwhile to raise more capital and do a fee business, you need to find different strategies that basically have a longer term view and take huge positions and get into huge positions because they're able to build them over a long period of time. So we're seeing prop trading firms get into that. It's not super easy for them because it's like a whole different way of trading. And historically, all the things they've optimized for, like super low latency, very microstructure driven model based features, all those things are kind of like a bit useless for this longer term type of trading, right? So to give you an idea, like a high frequency trading strategy, you would try and react on every event that happens in the market and you would update your model on every event. Kind of a longer term trading strategy, you might only take a summary of the market every minute and then use that to update your models. So it might all sound very different on the face of it, but it's like a different way of thinking. And it's not necessarily a direct synergy. That's what I'll say. And then when you get into really long term kind of, you raise like $100 billion or something and like have a huge hedge fund, that's really kind of discretionary, understanding the business, understanding like, if you're trading stocks, the fundamentals of the business, the sector, the industry, the way macro is looking. And yeah, that's, it's a very different game. So it's like a completely different company, basically. And you'll even see a major hedge fund like Citadel, the teams they have, the equities team, the macro team, the quant team, the commodities team, they're actually completely separate and siloed companies pretty much. And a lot of that is due to the fact that, there's actually not that many synergies between like different businesses and trading. They're like very depth first.
Yeah, no, for sure. I had someone who used to be a senior PM at Millennium, and he was talking about, though he's a fundamental guy, there's a strong emphasis on the risk overlay that the quants have, and really going, really isolating the idea. And if that's part of the reason why Ken or Izzy have been able to build businesses that can really scale in the money management. But what you've mentioned there about a firm like Tower trying to get into, that business, I think it's really interesting. I think this can be exciting. I guess, what were you doing? What sort of stuff did you work on?
So I was at Tower and Flow before that. I was working on high frequency. So I started on the crypto team and then I moved to the commodities team, basically. Tower got into a lawsuit, which was well publicized in Bloomberg, around crypto trading activities when the SEC was very active on the stuff in the Biden administrations. So I moved. It was good. I was hired there to do crypto. The interesting thing about crypto is like the exchanges are very different, and they were kind of built with the startup mentality, move fast and break things approach in mind, right? So a lot of the exchange APIs are a little bit broken and they have like a few intricacies here or there. If you understand them really easily, really well, you can like place your orders faster than anyone else and things like that. So I was really an expert on that kind of stuff. And it was a fun game because the exchanges would like upgrade their APIs like every couple of months, and then you would have to like figure out what changed and then like update your strategies. Otherwise somebody would update them before you and lose. There are a couple of firms out there who are really, really good at this, and that's basically their entire edge, and they're still doing really, really well. When I moved to the commodities team, I was more doing quant research, so more like on the machine learning models that we had. Really trying to understand what market effects they were trying to pick up, and also improve like the trading pipeline for these models so that they fit the market really well without overfitting. Basically, if I had to give a high level summary, that would be it.
And what years were you at Tower running the crypto stuff?
So it's 2022 to this year 2025 for the Tower, 3 years.
Okay. So that was, when did FTX collapse? What year?
November 2022.
Oh wow. So what was that like?
Yeah, it was nuts, to be honest. There was like a conference going on in London, like a crypto conference. I got invited to that through Tower, and then I was there, and then my Slack kept popping off on my phone. I was like new at the company, right? I joined like July, so I was brand new, okay. And my phone was popping off, and they were like, "Oh, and it'd been happening for a couple of days, right? Like there were rumors going around that FK is insolvent. Sam put out a tweet saying we're not solvent. Then there was a tweet that CZ is going to buy FTX, like Binance is acquiring FTX, and then like they poured out, and then CZ was like FTT is going to zero their token, and then Caroline Addison put out a tweet saying, "Oh, we'll buy all the FTT you want at like $22." It was trading at like 26 or something. So, it was an interesting time. And then when the rumors got confirmed, I was at this like it was like 7 p.m. London time. And I was like, looking at my phone. Everyone was like, "Well, we've got a load of money in FTX. Like, what are you going to do?" So there are lots of stories. So I can't comment directly on what happened at Tower. There were I had a lot of friends, and I personally have some money in FTX actually. So a lot of people managed to get their money out in different ways. So I had one friend who literally tried to, so they had like a few $1 million. They were like a small market making firm, and they bought like $1 of every coin. And then they tried one by one to withdraw all of them. And then Dogecoin, they could withdraw, right? So it's just like a random flute. Like Dogecoin withdrawal was to the neighborhood. So they sold all of their like millions of dollars straight into Dogecoin and withdrew all of it to Binance. And they made out. Like they smashed it. They like got all their money out. So that was very good for them. I had one friend who had a lot of cash on. And then I remember this really clearly. He was like, there was some news like, oh, Tron is going to be withdrawable, but that was a scam. Justin Sun just said it to pump the price of Tron. So everyone started buying Tron, and then it was a scam. But he bought Tron, he made a lot of money on it, on FTX, but he was like, "Oh, FTX, I can't even withdraw. Like, this is just fake P&L. Everyone's going out of the market. The market's super wide. Like, everyone stopped trading, whatever." And then there were these like Tesla tokens on FTX. And somewhere on the website, it said these tokens were backed by some Swiss company, by real Tesla. So he was like, it's worth a shot. So he just like full ported like $1 million straight into Tesla token. And then there was a CPI announcement as well that day, like inflation announcement, and it was really weak. So Tesla pumped, like all the tech stocks have pumped. We made a load of money on that. Then everything froze. He was like, oh damn, like, okay, now I got to find the people who back these with Tesla, right? Like real Tesla. And I got to get my Tesla off them, like, sell them out and make a load of money. Like, it was over $1 million at that point. And then, yeah, he said there was like a Reddit group of guys who tried the same thing. And then they made like a Telegram group. And then like one of them flew to like Zug or Zurich or something to like the offices of this company. And it was like empty. It was like an empty office. It was just a shell company. And then like there was a lawsuit or something, but like they never got any money out of it. As in they didn't get their Tesla. And then obviously there was like FUD of like, oh, this is going to be worthless. No one will recover any money. And then like Bitcoin recovered, and like they sold the stake in Anthropic, and then they had more money than they owed. Even after lawyers. So that friend got his money back. I think he like made like around $1 million. Yeah. Plus interest. So we did not do anything super smart, basically. A tower, I would say, just like kind of, we tried a few things, which maybe I shouldn't mention, but like eventually we just got the money back like everyone else. Yeah. And now SBF's trying to get pardoned, right? He's like, well, everyone got that money.
Yeah.
What did I do wrong?
No, my ex has been popping off. I've been seeing all the tweets on FinTwit of SBF. Oh, well, it's calm. It's calm.
Yeah.
No, for me, FTX is a very it's a story that that I look at pretty deeply, because I used to family, like I used to have a co-working space in the same office that used to be FTX's head office. And so when I was going to high school in Hong Kong, I would see these guys in FTX hoodies. It's like a proper office, but they'd all be in their hoodies and their shorts and their slides, right? And their socks and slides, because how people were wearing that at the time. And there's this one photo of Caroline Ellison and I might put this, on the podcast, but with the green, there's greenery behind her and she's smiling and there's this window. And I remember seeing that photo and going, that's crazy. Yeah, that was my view almost every day after school when I'd go there and, study a little bit, grab myself a matcha latte before it was cool, right? And I remember just thinking to myself, that is mad. That is absolutely crazy. And I remember one day, I was in high school and I was in the office co-working space, and I see a guy with curly hair, right? You know, like long curly hair, a bit unkept, and he's wearing some slides, right? And I was maybe 16 or 17, and I was thinking, oh, dang, that's him. Because this is when he was at his peak. This is when people were talking about him as this is the next guy. He was on all the effective altruism stuff. You know, I don't want to, I'm going to give it all away. You know, I'm here to make the world a better place, right?
There's been no one like FTX or SBF, you know, than us. We're going to build FTX without the crime. I think FTX was the greatest exchange. Yeah. They tried to do everything, and they, apart from all the crime, the exchange was like an insanely profitable business, right? The exchange made a ton of money. And it's very interesting how SBS spun his narrative around EA. And, you know, I was on the effective altruism committee at Cambridge, right? Like Cambridge is one of the founding universities where effective altruism was started. And, you know, I went to all the talks, and I was in like the earnings to give camp and stuff as well. And I was like, the stuff this guy says, this is like not what EA is about, right? He's like, remember he had this preach, right, which was like, oh, I have a use for like infinite money and then he like tried to argue how like infinite money is a good thing because then it means you can give more of it away. And then he was like, yeah, you know, I like give all my money away. But then I think he spent like $150 million on their apartment complex in Palmer's, all the stuff. I was like, come on, man. What are you... He was a bit of a legend, yeah.
He's definitely a character, and his story is not over. Clearly not over.
Not over. There's a lot of PR money going into that pardon.
Oh yeah,
that pardon campaign. I don't know if you saw like the 60 Minutes with Trump. They asked him about CZ and why they pardoned him.
I didn't see it. What did he say?
Okay, it was like the interview was like, so you know, CZ, he was like indicted for like all these money laundering violations. He went to prison for 6 months. Like, why did you pardon him? And Trump is like, okay, you ready? I don't know who he is. And then he's like, I don't know who he is, but he was a Biden witch hunt, so I had to pardon him. I was like, okay, that makes sense. Yeah, cool. Very cool.
Yeah. So, and then FTX, one of the best businesses, right? You want to build something that's FTX minus the fraud. Tell me, what are you building?
So we're building QFEX. We are the first TradFi perps exchange on US equities, commodities, and FX. So we are aiming to provide that 24/7, no broker, completely seamless trading experience, both crypto and fiat money rails. You can wire whatever money, whatever cash you want in. And we are going to provide 24/7 futures with really high leverage on traditional assets, which have, you know, this kind of experience has typically been the realm of crypto so far. So you're soon, you know, we're very, very soon to launch. You're going to be able to trade Tesla, Palantir, Beyond Meat, Rivian, like whatever stocks you want, on the same basis as like Bitcoin or Ethereum. You know, these kinds of instruments. And this was really an idea I came out when I was working my last job. You know, I said I used to work in crypto and then I worked in commodities, and I switched between the two, right? And when I switched, it was really painfully obvious to me how antiquated the tech is behind traditional financial markets, right? So these exchanges, you know, you want to go Robinhood and trade Tesla, or you want to go Robinhood and trade Palantir or whatever, or like gold. The exchanges that service those are just like really, really old fashioned now, and they haven't really changed much since they were first developed in the 18th century in terms of product offering. And in terms of tech offering, it hasn't changed much since about the early 2000s when they first started doing APIs. So I saw a lot of waste because at Tower, we used to make a lot of money off the inefficiencies that exist in these exchanges. And that wasn't the type of money we've been making in crypto markets. It was much harder to make money there. And I saw this opportunity. I was like, hey, you know, the world deserves trading tools and trading access and a fair exchange like that exists to professionals, but for everyone in retail. I think crypto did a really good job of that. And we're just bringing that to traditional financial markets.
When are you launching?
So we're going to have the closed beta launch. We've got a wait list of about 10,000 people. We're going to launch to about 100 people a day starting end of November. And then we're hoping in Jan, we'll be able to just open the floodgates for the wait list and let everyone who wants to trade come through.
And what excites you the most about building QFEX?
Yeah, it's a very different challenge, obviously, to working in high frequency trading, right? So HFT, you're kind of the small cog in a big machine. You have lots of things that you need to do and look at, but they're all very detailed, and you just become an expert at one tiny little thing in particular. The great thing about entrepreneurship is like you get to add value across a lot of things. You got to learn about a lot of new things. And building an exchange is really tough because it's like you're building an exchange and you're kind of thinking, how the market maker is going to think, how the retail user is going to think. You're building a front-end product. You have to go through regulation. You have to be licensed. You need to be connected to banking rails. So there's lots of moving parts, which has been really exciting and really cool to learn new things. But I think for QFEX, particularly what excites me and what excites the team the most is like the ability to make a huge impact on the future financial markets, right? So whenever we speak to someone, vendor, partner, user, whatever, no matter how bullish, and it's mostly bullish, but there's some skeptical guys as well. And I say, look, if you imagine a universe where in 5 years' time, every futures exchange in the world isn't going to look like what we're building at QFEX. And every single one of them, without fail, says, no, it will look like QFEX. And even the ones who are really bearish on us, they're like, it will look like QFEX, but one of the competitors will do it. But they never say this isn't the future of financial markets. And I think the really cool thing about building QFEX and building in fintech in particular is, in fintech, you got to get things right. You can't really move fast and break things because you don't want to lose people's money. You don't want to lose people's trust. You don't want to lose a regulator's trust. And it's really easy to see, what the future in fintech is going to look like in 5-10 years time. And it's really hard to build towards it, but it keeps you motivated because you know what you're building towards and you know other people are going to do it if you don't do it. One of our partners at YC was this great, amazing founder called Tom Blomfield, who made a bank called Monzo, which you're probably familiar with in the UK, has like 15% market share in the UK, right? Just crazy for a bank. And he told us, in 2015 when he started building this, the reason they could do it is because there were changes in the APIs that the UK government said banks now had to release a lot of information through the API and allowed a lot of payments to go through the APIs, which weren't happening before. So he was like, anyone who knew about fintech at the time knew that they were going to be app-based banks, right? Monzo was one of the original app-based banks in the UK, along with Revolut. And he said, everyone could see that there was going to be a bank like this in 5 years' time. And there were like 10, 15 people trying to build the same thing. And we just executed it better. And that's how we reached that. So that's what is really exciting about QFEX is we're in this race, right? We want to give the best possible service to our users. And we know we're building the future of financial history. And like, we want to get our names on it.
I would actually extend that idea that you can see the future in 5 years and you are building towards that future to, obviously there with some caveats, but to many industries. And that I would actually fully agree with you that execution is the ultimate edge, especially today. Because I think in the 2010s, there was so much inefficiency. Anyone, you just have to come up with a good idea and just to do some B2B SaaS, whatever, right? And you could make money. Right. Today, I feel like the talent, the level of talent, technical talent we have now with, call it, guy who worked at trading firm, guy who worked at big tech, dude who's been programming since 7, right? The technical talent is there. The ideation, everyone is trying to think of ideas. And so I think today, and I think you'd agree, execution is the ultimate edge. What is your executional edge, would you say?
Our executional edge is, we have the best talent in the industry. And I would like to think that we work harder and we're smarter and we are just building towards a future that we kind of grew up with, right? So if you look at our competitors, a lot of whom are older, but our average team age is probably like 24, 25, which, in Silicon Valley now, there's like a trend of younger founders, but in fintech, that's still really, really young. I would say the difference with us is, we all worked at the top trading firms. I worked at Tower. My co-founder worked at Citadel. Our founding engineer worked at Jump. Our CEO worked at Barclays. He was a trader there. We all grew up with the type of market and the type of financial trading that we are building towards. My first job was in crypto, right? My co-founder's first job was in crypto. we saw how financial markets are meant to be from a very young age, and we didn't grow up with those preconceived notions of this is just how the world is, this is how financial markets work. We were able to challenge those from a very early age, right? So to me, I only saw the ins and outs of how a traditional market, like a traditional futures or traditional stock exchange works, like a New York Stock Exchange or a NASDAQ when I was like 25. And I was like, what the hell is this, right? Like this is really bad. And we are not jaded. We have a very strong idea of what's right and what's efficient in the world. And I think, you know, in our team, we've had a lot of people who've given up very, very high salaries and very high guaranteed comps to come and work on the project. I think we're really driven by that mission to improve structurally where financial markets are meant to be. So, you know, high frequency trading firms, prop firms, outwardly they say, hey, you know, we do market making, we add liquidity to the markets. More liquidity is better. We help free market find real prices, like whatever. Like no trading firms, everyone is just trying to make money, and there's like a side effect that they add liquidity, right? And I think for us, it was really important to kind of back that up and say, you know, we're in this industry to ultimately make it more efficient and to make it better for the people who we hand it over to. And that's our mission, and that's what drives us everywhere. And that's why we work 9 to 9, 6 days a week. You know, that's why just before this, it's a Saturday, 2 p.m. I was like replying to emails, I was sending messages. My co-founder was, you know, working on the code. I think there's no team I've seen out there that has as much drive as we do and as much to prove as we do, basically.
You mentioned there that a lot of your team members left very high-paying jobs at top trading firms. How do you incentivize people to do that?
I think it's kind of self-selecting. So, you know, we're very open with our mission, and we're very open with, I'd say the great thing about working on exchange is obviously such a big idea, right? So you look at Coinbase is like not even a top 5 crypto exchange globally, right? Like the best crypto exchange are Chinese, and Coinbase floats at an $80 billion market cap, right? In the US market. So on NASDAQ's 80 billion market cap. I think for people who know about venture and people who have that mindset of, you know, you should work on very high upside projects early in your career because that's the only time you're going to be able to do them. And the expected value is actually a lot better than you think. I think for them, they're already kind of looking to make that big bet, right? A lot of our employees, our more junior employees who have maybe less of a stake in the company, they want to work for a team that has that kind of vision, that kind of mindset. And they want to do it in a really impactful area, right? Like I joke about this in B2B SaaS, but like honestly, it's not, right? Like it's a very, very big idea. It's a very grand idea. If it takes off, like it's going to be not only lucrative from a financial sense for us, but you know, it's going to be part of history, right? Like take a typical unicorn B2B SaaS, like you know, you're not putting your name in history, right? As like you built like a new type of AI video editing software, no, right? So this is a very big idea. It's very self-selecting. It gets people, you know, the vast majority of people are comfortable with whatever money they're making in these trading firms, but we get a very particular type of person who wants to take that bet and wants to take that risk, and they recognize us for the top class team that we are. And I guess for them, then the bet is, hey, can I do this on my own? Or are these guys already, you know, a year ahead of me and they have the best team in the world? I may as well join them. I think that's what allows us to get good people.
You touched on how it's a very self-selecting thing, and that the people who want to work for you, they are trying to make these big bets, especially very early in their career. Regarding culture at QFEX, what would you say separates it from the already very intense culture that you experienced at the previous trading firms you worked at?
You know, I would say we've definitely carried the culture over more from those firms than we did from what we learned in San Francisco and what a typical Silicon Valley startup operates like. I would say, you know, the difference between us and a trading firm is you have a very long-term view, right? You work in high-frequency trading, all your strategy is expected to be sharp 10 plus. That means if you lose money on any given day, like even over like a 24-hour period, something has gone really wrong, right? Like you're not supposed to lose money when you're doing prop trading. So we have that very long-term view. We really don't get stuck in sunk cost fallacies, which a lot of trading firms do when they have a strategy that isn't been doing so well, hasn't been doing so well for a while, but they refuse to kind of pivot away from it. They just keep trying to like improve it. We are not afraid to pivot. We're not afraid to try new things and to take on challenges where we know other people have failed. But overall, we're more similar to a trading firm than we are to like a Silicon Valley startup, I would say. We do have that intense results-driven culture. We do work very hard and we do hold ourselves accountable. We don't really follow the move fast and break things maxim. Like, we want to give a product which is not, customers going to be safe, that their money isn't going to get lost with us. And that's important in fintech, I think, because your people are ultimately handing you like a month's salary or a year's salary, or like, their kids' college allowance or whatever, right? Like, you don't want to do that. I'd say it's been very interesting. My co-founder especially, he came from Citadel, and they have a very intense culture. So he definitely puts the print on our culture most. Like a lot of accountability. He didn't like working at Citadel, I have to say. He said it was it went too far, it was too intense, but they did a lot of things very right. And there's a reason they're the best hedge fund in the world. They have a very radically intense culture where everyone knows what they're a part of, what thing they're working towards, and that's what we try and keep up. We don't really have gimmicks in the office. We don't have we don't do like weird company things that we then post about on LinkedIn. Like, everything with Barrel Socials was like our opinions on markets and market structure. It's all pretty focused, and I think people should take comfort in knowing that we're working all the time to give our customers the best trading experience possible, right? My co-founder has even the dev environment set up to his PagerDuty to his phone. So if there's like even a bug in the dev environment, he wakes up at 2 a.m. on Saturday to fix it. It's like very common for him. I'm not sure his girlfriend appreciates it, to be honest, but
that's intensity. Mm-hmm. And I think there are many companies that can speak about their culture and their intensity. Oh, like you mentioned there, 996. I think that's resurged as an idea, and much more than the chill at work or work from home culture of the 2010s in tech, and mostly big tech. But I think it's a different thing, and I think you fully agree. It's a different thing to actually live it. So you've mentioned that 2 a.m. wake up and just doing it. And I doubt he goes on social media and LARPs on Twitter talking about how, it's 2 a.m. and I just, fix some code that was malfunctioning, 996, let's fucking go. Right.
And I agree. There's like going fix, and then, 3 of those hours are spent getting dinner and going to the gym and being the fauna with your teammates. And then there's like real 996, right? And that's, I think a lot of us are bound by the fact that, we don't want to mess this up. Like, we have an outstanding opportunity. I had this idea way before it became kind of popular. There's now kind of people murmuring on Twitter like, oh, perps are going to come to equities, crypto-like trading is going to come to equities. Hyperliquid, one of the best crypto decentralized exchanges, just listed a NASDAQ future. But we started a long time before that. We know we're onto something really good. And the team is just like really driven towards that goal. Yeah.
I want to go back to something you said in your answer to my previous question. You talked about your co-founder, worked at Citadel, took a lot of things that made sense. Well, didn't really enjoy it, but some things made sense. And, I think to the podcast I was listening to about Ken on the Founders Podcast, and he talks about the people Ken looked up to were, titans, people who just watched everything very, very closely and really built a culture of meritocracy. And I think he's absolutely engineered that at the firm. At QFEX, how do you really engineer the culture of meritocracy when it's, I guess, not as obvious with regards to P&L in the way it would be at a trading firm?
We have very, I think everyone knows we expect perfection, right? So Josh and I enforce that very strictly. I think it's not that mistakes aren't tolerated, but if you did something and you could reasonably have expected to do it perfectly, like we expected to be done perfectly, like it's that simple. Well, how does that translate on the ground? You know, the code has to work and it can't have errors, and it can't, you know, under a low amount of load, start giving connection errors, or it can't like go down, or like exchange components can't restart. Now, under a very large amount of load, if we do our jobs properly, it should come under a large amount of load, and then maybe, you know, things get slow here or there, or, you know, something needs a restart. As long as something catastrophic happens, that's fine. And, you know, I think people are already motivated at a level where they're kind of thinking in 3, 6, 12 months time, what's the situation going to look like? And the same on the front end, you know, like things have to be pixel perfect. That's like just the minimal level expectation we have. And I think we're not at a stage where anyone lets standards slip, and we've hired people who can more or less work independently, and everyone is kind of working. Everyone owns a large piece of the exchange, right? So we're a small team, we're still lean. We've got like 7 people at the moment still. And an exchange is such a big complex beast that everyone pretty much owns like a big chunk of it. And we've hired people, and, you know, we've let go of people as well who can go up to these standards. But we've hired people and we've put people in place such that they can pretty much run their section independently, and they have like ownership of it, and they feel connected to it. They feel like they own the thing. So that's really the kind of culture we try and foster, is one of like ownership and taking things personally, taking things like, you know, I control this piece of the exchange. If it goes down, that reflects poorly on me, and it's not the standard at which I work up to. And basically, how do you reflect that in hiring? You know, typically we found the people who want to work for us, and that we want to work for us as well, they're generally people who have ambitions maybe to do their own startup one day. And, you know, we try and hire them thinking like, okay, if they, you know, if QFEX doesn't take off as well as we think it will in like 2 years, will they go off and try and use the skills they've learned here and the connections they made here to try their own thing, right? And if we think that's what they're going to do in 2 years' time, if things don't take off, and if things do take off, obviously they'll stay, that's like a really promising sign for us. Like, we don't want people who treat it as a job. We ask very specific questions in the early interviews around, you know, attitudes towards working from home versus working from the office. We listen very carefully to responses. And, you know, if people say, oh, you know, yeah, working from the office is fine, occasionally I might need to, it's already like a bad sign. You live 5 minutes from the office or 15 minutes from the office, there's no reason for you not to be coming in every day. And the only reason you're not in that case is because you think you have something better to do with your day. And that's not the level of commitment we want. So if you look at the best companies, I mean, I think Stripe only had 2 employees for like the first year. Hyperliquid has 12 employees, and they process like $30-40 billion of volume every single day. Like with the hiring, you have to make good choices. And, you know, I think we've got the best team possible for us at the moment. And we're very careful to adding new people because, yeah, as you said, it can affect culture, and it affects the culture that we're trying to build.
In the hiring process, you've touched on that. What is one question that you don't think is asked enough, that you ask, that is given real insight into the nature of someone's work ethic, personality, contribution to a company?
Yeah, you know, so our hiring process for engineers, let's say, is like we have like a culture fit round and like a CV round, and then like a coding exercise. We pretty much know by the coding exercise whether we think that person's going to be hired or not. Most of the time, right? So generally, anyone who does the coding exercise with us tends to pass. I think it's really easy to tell from before, if you look very carefully and don't lie to yourself, who's good and who's not. And the biggest lesson I've learned from recruiting is like knowing when you're being sold something, right? So some people are naturally a lot better at selling themselves than others. And you have to ask questions in a way that forces them to strip back their salesmanship of themselves and really get to the root of what they're capable of doing and what they're going to do day to day on the job, right? So what we're not looking for at the moment is like managers, right? Like we don't have enough people for managing. Like we want doers, right? We want people who are actually going to go and do the work. Anytime somebody talks about the amount of experience they have, right? That's usually a red flag, because instead of talking about experience, they should be talking about what they did. Do they know details of what they did? Did they do the work themselves, or did they get other people to do it for them? do they know people? Do they talk about who their contacts are in the industry? Or do they talk about the work that they did, right? People who are really good often have very good contacts in the industry, but that's not what they lead with, right? So what we do in the first couple of rounds is we figure out, like, to what level of detail do they really know the work that they're doing, right? Do they know all the edge cases? Do they know where things could go wrong? Do they know what's coming up on the horizon, how they would architect things differently? It's easier for technical roles because we're technical people and we can get into the details of that as well. But a big hack we learned is, when we were implementing for our compliance role, for example, right? We need to hire a compliance officer. Did they basically sign off on some papers that they send the regulator, or did they implement those papers on the ground in terms of operational work that they did, or somebody else did? And were they able to measure whether that was a success or not? Did they take ownership of it? I think not enough people. People. A very common question in interviews is like, "Take me through a CV." Like, if you're not interrupting someone every sentence when they take you through their CV, I don't think you're going deep enough. And we found that based on the level of detail at which people can speak about their existing roles tells you a great deal. It tells you, were they focused? Did they understand everything they did inside out? Or were they just part of a team? Were they hanger on? Did they, give tasks that were assigned to them and hand them off without understanding the full picture? We're really looking for people who can understand the full picture of some system and how it integrates with everything else. And those are like the 18 players.
That is a great insight. The interrupting when someone takes you through their CV, I have never heard that before. And I'm thinking about it now. I think that's an amazing thing to do. Especially technical projects, they go through one line. What did that actually look like? Gosh, I think that's an insane hack. Hopefully people are listening and can implement that, because I think that's a tremendous thing.
Yeah, I mean, one of our angel investors actually told me, she said the first round interview she did with everyone who worked at the company was she took their last 3 jobs and she said, for each job, how did you end up in the job? Tell me everything you did there. And then she would interrupt the hell out of them and just ask how much detail they knew about it. And what did you do? Why did you move on? And why did you end up in the next company? So that kind of intercompany phase also tells you a lot about their personality and what they're like, right? If they say like, oh, I didn't like my boss or whatever, and that happens like 3 times, that's probably not 3 different bosses having 3 different problems with them. It's probably them. And we do a lot of, that kind of softer stuff as well, I guess, is more important for non-technical people, but it's equally important for everyone, I suppose. That softer stuff is, let's say, you can figure it out by back channel references, right? Like, we go and we just message people on LinkedIn who worked with them and say, like, what were they like? If they're their friend, we just discount whatever they say to 0. If it's like, you sat next to them, but they didn't hang out with them after work, that's real insight, right? We were about to hire someone and we heard from 2 different people who messaged randomly on LinkedIn, like, oh, she used to take like a month off, like off sick at work. And they were like, we didn't know what was wrong with her. So there could be something wrong with her, but she didn't disclose this to us, and everyone said in a way that it was kind of sketchy. So we were like, okay, well, I'm not sure there's a place for her here. I would say, especially in Europe, employment law is very forgiving towards employees, and there's like easy ways to game the system, right? If you know what you're doing and you operate within the confines of the law. So you have to be on the lookout for those kinds of people as well.
Absolutely. We're on the topic of hiring, culture. You were at YC, right?
Mm-hmm.
What did you like about what they taught and what you learned there, and what did you not like?
Yeah, so I would say YC, a lot of people think it's like a summer camp for startups. It's a very, very small part of it. I think we probably had around 3 hours of events a week. And we were probably working around 80 to 90 hours a week, to give you an idea. So it's a small fraction, around 5% of your time is actually spent at YC events. That's on purpose. They want you to come there and work. And the main value out of YC is you're surrounded by all these people who kind of are in a similar boat to you, have similar problems to you, in a similar position to you, and they're all working really hard. So you feel like you want to work really hard as well, right? It's one of these hacks, if you go work at a library versus you go work at your home, or you work in an office, like, you just work harder because you're surrounded by people who are working. So that's really cool. YC, I think for it really depends who you end up with and who your partners are. So we had pretty much the best experience out of YC. I think that would have been possible for us. We had 3 amazing partners. We had Gary Tan, who's the president of YC, Tom Blomfield, who, you know, he made and scaled a decacorn fintech startup, so he knew exactly the kind of space we were working.
Great for you guys, especially.
Yeah, exactly. And, you know, we're British, so he loved us as well. And Pete Kuman, who built and scaled Optimizely, which is like one of the best, or the best, kind of front-end A/B testing software out there in the world. So he had a lot of kind of general business experience. And, you know, I think we did a good job presenting ourselves, and we took every opportunity we got. We had the opportunity to meet a lot of very powerful people. We met Paul Graham at his house in Palo Alto, and he actually invested in us with his personal money. Wow. And we met Sam Altman as well, which was really, really cool. Obviously, he's the talk of the town right now. And
what was that like?
Yeah, it's incredible. But the thing with Sam is, like, if he says, like, oh, OpenAI is going to put someone on the moon in 6 months, like, you'll just believe it. Or like someone on Mars in 6 months, you'll just be like, yeah, probably. He's just so confident, and he's someone who's thought so deeply about his field, right? And he really lives and breathes OpenAI, that he can just tell you very precise answers to questions that you think no one else could answer in a million years. And the level of confidence he's able to have with those questions is just incredible, right? And it may not be that all of his predictions really necessarily turn out to be true, but it just kind of tells you the mindset you have to be in to build a behemoth like OpenAI, right? It's like absolutely nothing. You know, Sam was in the first batch of YC ever. So he was like one of PG's earliest picks, right? And it really goes to, it's like a testament to PG how good he is at picking people that, you know, everyone is kind of first batch ended up doing really well. You know, Sam Altman, I mean, you can go on the internet, like look up the first batch of YC. So I think that was really inspiring. That's what I liked about YC. I think, you know, we were very lucky with the partners, and we worked closely with them, and that was very beneficial to us in terms of kind of advice and fundraising and all that stuff. We had a very good round, even for a YC company. And yeah, just meeting people who've gone out there and built, like, you know, $100 billion, $1 trillion companies, and seeing the way they think, it's very different to what you learn about in finance, right? Like the richest guy I know in finance, there was a guy at Tower who was paid let me get this right, 9-figure sum in 2021 bonus for his trading strategies. And, you know, the way someone like him thinks and the way someone like Sam Altman, or, you know, any kind of these like big Silicon Valley barons thinks, like very, very different, different mindset. And it really snapped, you know, me and my co-founder coming from like a trading background where everything is dog eat dog, very competitive, very intense, to more of a, you know, let's grow the pie, let's be optimistic, you know, we have something the world wants. People aren't, you know, the people we go into business with aren't going out there to kind of screw us over. They actually want to work with us, and there's value that can be created from both sides. That's like a very different mindset to what we had in finance. So YC really helped us kind of enter that startup mode, that startup way of thinking. And yeah, I think it was a good experience overall for us. Yeah, we didn't really get out much. We were just working all the time, I guess, San Francisco. But yeah, I think people who it doesn't end up being a good experience for kind of come in, maybe they're not as open-minded. You know, I see a lot of people who are kind of further ahead in the product journey, and they don't really want to change tack. What YC is telling them, I think that's a mistake. One of the huge advantages you have as a startup is that you can change your idea, or you can change the direction of your company very quickly. And we had a talk from, I think it's Varun Mohan, who's the CEO of Windsurf. And, you know, this guy runs like a unicorn, right? And they have like insane revenues, like definitely 100 million plus the time he spoke to us. It was shortly before their acquisition. And he said, you know, we've got 50 people in the company now. And every day I wake up and I think, do we need to pivot? Because he was like, that's, you know, we could be in a situation where, you know, OpenAI just build what we're doing and then we're screwed. Or like Cursor release some killer feature and then we're screwed. Or like all of our customers leave. And that was the DNA of his company, right? Like they started off doing something completely different, and they pivoted again, they landed on Windsurf. Now they were acquired for a 9-figure sum. But he was like, never forget what roots are as a startup, which is like you can move faster than anyone else, right? You have the ability to pivot. These big companies, they're not going to suddenly change the entire direction of the company. Even Meta, when Zuckerberg tried to pivot the entire company towards a metaverse. It didn't work, even though they have probably the most startup culture out of all the big tech firms. They just got too big for it. And like, it's not possible once you have like 1,000 managers distributed over your company, right? So that's where I see, going back to your original question, that's where I see some YC startups failing is like, it's, they're too far in the product journey. They don't really want to listen to the advice. They don't contextualize the advice for their own company. Co-founder infighting, very, very common. Luckily, me and my co-founder had a very good relationship. That's a lot of seed investors ask very specifically, very carefully, what's your relationship like with your co-founder? Because that's one of the biggest ways an early stage startup can break up is like, there's kind of clashes among co-founders. To anyone who's like on the fence about applying, I think you should do it. People say, why does he take 125K for 7%? It's not the best of terms, but the amount of value they add is like phenomenal. Like, and when you do fundraising, you figure out like, we had much higher offers in the valuation we ended up taking, but we took the best aligned partner for us, and like the best partners do command lower valuations because they add more value to your company. They earn their valuation in your company via all the work they put in, and that's something a lot of people forget.
It sounds like at YC, you had few but extremely high impact interactions that have stuck with you till this day. Talking about what you've illustrated there to me about Sam Altman, the way he thinks. I have never heard a depiction of Sam that clear. And so to me, it's extremely clear that it's been imprinted onto your mind that this is how someone who's been able to build a behemoth like OpenAI thinks. And I think you're a great person to answer my next question, especially having gone from trading, as you've said, dog eat dog, right? Building QFEX, which, great, good luck on that. I really hope you succeed, man. Seeing two sides of the coin, seeing two cultures that can both mint billionaires. Mm-hmm. How do you think young people today should think? And I asked that question, and I want to provide some context. There's so much doomerism today. Mm-hmm. When I go on X, and I don't, quite frankly, I don't think it's unfounded. As in, I think we are living in a society where every domain is winner take all. And so you look at, someone like you, and I mean this, I would bet on one you versus 1,000 average people, they call it undergraduates, in the US or UK or, any country for that matter, just because, that's the world we live in. And so how would you think as a young person today, and especially for people who aren't unbelievably exceptional, who didn't go study at Cambridge and study maths like yourself, what advice would you give?
Yeah, it's a really, really good question. And thank you for bringing up the point about doomerism, because that's the first thing I was going to say is like, don't subscribe to doomerism, right? I think now is the best time to be optimistic and be optimistic about the future than ever, right? I think, a lot of young people nowadays, they kind of grew up in COVID in their late teens, early 20s. They have a slightly more bleak outlook on the world than maybe their parents or their parents did before them. I think there's never been a better time to be optimistic about the future. And the reason for that is we are at this like inflection point of acceleration in tech and in the amount of value people can create. And I think there's going to be a huge shift coming in the way, not only like the way the job market works, or like the definition of work, or like the definition of intelligence, like all those things are relatively trivial. I think there's going to be a huge shift in the way people think about what they're put on the earth to do, right? And now you need to like go and read what Sam Bankman-Fried thinks about universal basic income, or you need to read about Mark Andreessen's techno-optimist manifesto and all these things. But we're really at this point where we're moving from a world where there were like infinite wants and finite resources, and we're moving into a stage where if you're optimistic, even if you didn't go to the best universities or you didn't work at the best companies, you can create value for yourself and for other people like no other time in history, right? So if you look at my job, the job I ended up in, I probably would not have ended up in 10 years ago because it was just like very small and like no one had heard of these like types of companies, right? And if I graduated university, I studied at Cambridge 2016, 2020. If I graduated 2010, I probably would have become an accountant or something, right? That's like, with a master's degree, that was like as good as it looked, right? And if you look 50 years before that, I would have ended up nowhere because to get a job in a high paying role, like in financial markets for financial services and stuff, it was more like who your father was, right? Like it was very hard to get jobs like this because like it was very patronage based, right? It was like if your father worked at like the right company, and like it was fathers at the time, like usually women didn't work in like high pay roles and this stuff like 60, 70 years ago. And that's how you'd end up there. It was like, and even to get into the top schools, the top universities back in those days, like it wasn't hard to get into Cambridge 70 years ago. You just have to go to the right high school. How do you go to the right high school? Your father probably went there, right? And it was probably an all boys school. So if you look at kind of history, the amount of change that happened between 1600 to 1700 in the West, 1700 to 1800, 1800 to 1900, right? And then there was some acceleration started. And now it's like, I'm saying my life would have been significantly worse if I was just born 10 years ago. I dread to think how much better my life would be if I was born 10 years from now. We've basically entered this stage where those barriers to entry or social mobility, who was your father, which high school did you go to, which college did you go to, what was the first company you worked at, right? They're slowly being broken down one at a time. And the way the free market works is it just rewards people who create the most value for others, right? That's like how business works. It's like for business to work, if I give you $1 of value and you bring me $1 of value, we can do business together, right? It can't be parasitic. You have to create more value for the person than they're paying you in cash. And we're now at a stage where it's going to become very, very clear in the next few years where anyone, no matter kind of where they are in the world, what poverty they were born into, as long as they have access to a computer and the internet, they can create more value than they've ever been able to create more before in history, right? It's not constrained by the amount of time they have. It's not constrained by the amount of resources they have. It's really constrained by what they want to do with their time and, electricity, which is like very cheap, right? That's like the ultimate physical barrier is like, how fast can you run these computers and do all the inference for your models? So that brings challenges for some people. I think for people who want to, go to average things, I think it's going to be very hard to do average things. I think very in the future, a lot of jobs which people historically could kind of do and have like a decent life for themselves and their family and retire in without having to kind of work too hard or without exercise their brain too hard, those are going to go. But for people who do want to create an impact on the world, I think the opportunity is like there like never before. And all these things you mentioned, great companies, great CV, great university, great background, I grew up in a great family. Both my parents are doctors, right? Like I grew up around books. I had like a very good environment to study, which is what I wanted to do. I think those things are not going to be as important anymore because anyone with like a laptop and the internet can create as much, if not more value than someone with all those advantages. So I would say, to people growing up now, it's like, look, decide what you want to do with your life. I think soon there's only going to be one option, and that's if you want to create value for other people, if you have a passion that you're passionate about, soon you're going to be enabled to do that like no other time in history before. And I think for people who don't want to participate in that game, who don't want to kind of participate in life and the world of like value creation and business and work, I think either they're going to have a very hard time, or if Sam Altman's right, there's going to be universal basic income and everyone will live in utopia, right? But I don't subscribe to that. I think like issue will just happen and then those guys will then not have a good time. I think that's like the way things work. So yeah, I mean, this is, I guess, fairly common. Like what I just said is like fairly commonly heard throughout Silicon Valley nowadays, which is pretty much at the forefront of this kind of wave of innovation. Startups are growing faster than they ever had before. The stock market is at all-time highs on like AI optimism, and I don't think it's another dot-com bubble, right? I think these companies are creating genuine value. Unlike the dot-com bubble of the 2000s, like none of the companies there like really did anything, right? They didn't add any value to anyone's lives. And now here we are. I have an AI note taker on every call. You know, when we applied for our regulatory approvals, you know, we created all of our policies with AI in like 3 days, and like the lawyers told me it would take 2 months and like $100,000 to create them otherwise, right? Like, so people are able to save months and millions of dollars using AI, and that's like value creation like we've never seen before. And I think people who harness that are going to do fine. And yeah, like those CV points that you mentioned are going to become more and more irrelevant as time goes on, and the value and the value of education is changing as well, right? Like MBAs are not as popular as they used to be. They were just like a university branding exercise, right? Like if you went to a top university, it sounds good, but it's really just a CV clearing filter at the moment, right? That will soon go as well. I think in the US in particular, where they don't kind of defend the academic brand of institutions as much as they do in the UK, there's a lot of kind of there's like a very diversified selection of like who ends up in US colleges, like a top US college like Harvard, or any other Ivy League, or Stanford. I think, you know, people are going to start to question what they're getting for their value, if they keep charging these insane fees. So yeah, it's things are going to change very quickly, I think. So all the more reason to be optimistic, because when things change, people who are kind of positioned well can capitalize on that.
I love the optimistic message you're spreading. I think it isn't heard enough. When I talk to people, it's all like, oh, yeah, this, that. And I think it's so easy to get immersed in that thinking, because all your friends around you are thinking the same way. And they're like, oh, what is the point? And I think what you're saying about just going out there and getting after it and really creating value, I think that's a great message. And I mean this, if you were a stock, you know, I go all in on you. Like I feel you're I think you're going places, and I'm really excited to see where you go. Thank you so much for coming on Odds on Open. That was a wonderful conversation.
Thank you, Ethan, for having me. And my socials are open. DMs are open on Twitter for anyone who wants to message me and chat further about anything I said here today. Always happy to speak and give advice. And great job on the podcast, Ethan. I think you do a great job with all your guests, and it's been a pleasure being on here.
Thank you so much, man. All the best.
Cheers.